Ministry of Health is seeking advice from the Attorney General's chambers on the appropriate course of action as Pharmaniaga Logistics has refused to comply with a letter of demand issued by the MOH regarding shortcomings in the procurement of faulty ventilators. Deputy Health Minister Lukanisman Awangsauni said that the ministry issued a letter of demand for the reimbursement of 15.34 million on September 13th and provided PLSB with a 14-day deadline for response. However, Lukanisman said that PLSB responded by requesting the withdrawal of the letter and expressed readiness to negotiate the outstanding payment of 1.07 million for the ventilation upgrade project. He was responding to MP Lim Lip Eng, who urged the ministry to not accept the handoff and the irresponsible attitude of PLSB and the supplier from China over the faulty ventilators. Lim also recommended that the government take stern action by blacklisting Pharmaniaga or the ventilator provider. Lukanisman said the MOH will consider Lim's proposed measures to prevent similar incidents in the future. He also pointed out that the ministry is currently preparing its response to the recommendations by the Public Accounts Committee and is committed to improving the procurement process even in emergencies, as well as ensuring communication through the gazetted medium. The PAC's report in October revealed that the MOH had approved an allocation of 30 million as a down payment to PLSB for the procurement of 500 ventilators. Of the 136 that were delivered, only 28 units were working. Added to the 2.9 million for repairs, the government spent a total of 23.03 million for the 136 ventilators, with only 32 working at the end. Malaysian consumer and businesses have grown more pessimistic in the third quarter as inflationary pressures eat into spending power, while slowing external demand weighs on sales amid rising operating costs, according to studies done by the Malaysian Institute of Economic Research. The Business Conditions Index continued to decline in the third quarter, falling by 2.7 points to 79.7 points, the lowest level since the second quarter of 2020 during the initial COVID-19 outbreak, compared with 82.4 points in the second quarter of 2023 and 99.8 points in the third quarter of 2022, MIER said in a statement. According to the Research Institute, while domestic orders have increased slightly, export orders have reduced. Businesses are also concerned about increasing costs, with 56% reporting wage increases, while only 23% reported price increases. The Institute's Consumer Sentiment Index also continues its negative trend, dropping 11.9 points quarter-on-quarter to 78.9 points in the third quarter, the lowest since second quarter 2021 when Malaysia was in a new lockdown phase. MIER's survey found that 45% of respondents' finances have worsened in the third quarter, compared to just 10% who says theirs have improved. In addition, 40% of respondents expect their finances to worsen in the future, compared to just 15% who expect an improvement. The survey found that consumers are not only negative on the outlook of their future finances, but also pessimistic about their income's growth, job opportunities and inflation level. MIER said that its findings showed a mixed picture for Malaysia, with the picture for domestic growth being positive relative to other countries in the region, but there is some concerning results in terms of imports and exports. Meanwhile, Economy Minister Rafizi Ramli said that Malaysia's gross domestic product for the third quarter is expected to be better than the second quarter, despite a challenging global economy. He says that Malaysia should see a third consecutive quarter-on-quarter growth, which has not happened in the past 3 to 4 years. Berjaya Food's net profit for its first quarter of FY 2024 fell by 45% year-on-year to 19.03 million from 34.7 million previously, as inflationary pressures squeezed margins. Revenue for the quarter dipped 1.6% to 278.5 million, mainly due to lower sales from the underperformance of its Kenny Rogers Roasters restaurants in Malaysia. The group declared a first interim share dividend of 1 treasury share for every 100 ordinary shares held, which is equivalent to a 0.44 cent per share distribution, or a total of 7.72 million ringgit. Moving forward, the group expects all its operating companies' performance to remain on track for the rest of FY 2024. B-Food elaborates that Berjaya Paris Baguette continues to perform at a better than expected level, and new outlet openings are proceeding as planned. Berjaya Starbucks is expected to return to its revenue growth momentum once the challenging market conditions brought about by the recent Middle East conflict are back back to normality. B Food said that in order to mitigate some of the challenging market conditions, the group is focusing on cost optimization, labor/productivity management, and effective marketing strategies over the remaining quarters of FY 2024. Separately, in another boss filing, the group announced the redesignation of its CEO, Dato' Sydney Lawrence Keys, as its new group CEO, effective immediately. New Ace Market entrant Plytec Holding closed its maiden trading day at 32.5 sen, 7.14% lower than its offer price of 35 sen. The construction-related player's share price had ticked up by 1 cent on its debut, reaching an intraday high of 36 sen, but was unable to hold on to its gains. This makes it the fourth worst performing IPO so far this year. However, it was the fourth most actively traded stock on the bourse, with over 70 million shares transacted. At the press conference held after the group's listing, Group MD cum CEO Yang Kian Lok said that Plytec hopes to grow the construction method engineering segment, which accounted for about 43% of its total revenue of 158.1 million reported for FY 2022. Group COO Louis Tay Chi Siong says that the group remains unaffected directly by material shortages and price fluctuations, as they are often driven by market forces. The building materials segment contributed about 52% of Plytec's total revenue in FY 2022. Plytec raised 37.1 million from its listing, of which the bulk will go towards repaying bank borrowings, 8 million for capital expenditure, while 7.8 million will be utilised for construction of factories and labour quarters. A total of 26,286 completed houses valued at 18.3 billion were reportedly unsold in the second quarter of 2023. Deputy Local Government Development Minister Akmal Nasrullah Mohamed Nasir stated that, according to the National Property Information Centre, this indicates a 5.3% decrease in total units and a 0.6% decrease in value compared with the same period last year. To control the issue of unsold houses, Akmal said that the government had implemented the mapping of the Affordable Housing Index based on median income by state and district obtained from the 2022 Household Income and Basic Facilities Survey report. Akmal added that the government also encourages developers to conduct feasibility studies before initiating any development to ensure that houses built align with people's affordability and to prevent unsold inventory. Meanwhile, the value of real estate market transactions jumped 22.6% to 57.15 billion in the third quarter compared with the same quarter last year due to an increase in the transfer of ownership of major sales in the country, according to the Valuation and Property Services Department. Transaction volume increased marginally by 3.7% year-on-year to 108,955 in the third quarter. JPPH Director General Abdul Razak Yusak said the residential subsector continued to support the overall property market, according for 62.9% of total transactions, or 68,561 in volume, valued at 28.36 billion ringgit. Abdul Razak said housing priced at 300,000 and below per unit continued to dominate market activities with a 52.4% share, followed by those priced from 300,001 to 500,000 with a 24.7% share, while the rest were units priced from 501,000 and above with a 22.9% share. Abdul Razak said housing prices in Malaysia had stabilized with minimal increases. He said the Malaysian House Price Index stood at 212.6 points, or 458,751 ringgit per unit, with a small annual growth rate of 0.1% in the third quarter of 2023.